Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking back at the last two videos and some of the questions raised in the comments. It's a type of video I've never done before, so it'll be quite interesting to just look back in the recent videos and just see exactly how things have played out. I think quite a number of people thought I was being very bearish. It looked like that many people were not really watching the videos. So it'll be quite interesting to have a look at exactly what I've said in the last two videos and just to alleviate some of the questions some people have had. And for those of you who've been watching my videos for quite a while will know that I don't make predictions here. I have no interest in massaging my ego to be right or wrong. I don't look at the charts from that angle. And as I've said many times, I don't have a crystal ball. I don't even know what I'm going to have for lunch, never mind what Bitcoin's going to do in 1 hour, 1 day, 1 week, 1 month or 1 year. All I'm doing is using my knowledge of classical charting as well as candlestick patterns to give some sort of an edge in terms of determining which direction on the basis of probabilities the market will go. So in each of my videos I always mention which the higher probability is. So sometimes the higher probability plays out, sometimes the lower probability plays out. But that's the nature of markets. If you're looking for guarantees and certainties, you're really on the wrong channel. So today I'm going to look at the last two videos and just show you exactly how they panned out regarding some of the questions that were raised. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder. Please remember, everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. The two videos I'm referring to is the last one, which I did 5 days ago, last Monday, and the one before that, which was 12 days ago on the 31st of March. And the question I was posing here, is this the end of the Bitcoin bull market? And as you can see, there's a question mark after that. I'm just posing the question, are we in a bear market? I'm not saying we are in a bear market. I'm asking a question and putting it out there and looking at some of the factors that may well be pushing us down that road. And in the last video that I did here, once again, I'm posing the question that Bitcoin enters a bear market, and I put a question mark there because after I did this video, the markets went down even further, as you'll see when I show you some of the clips from that video. So what I'm going to do is I'm going to look at some of the content of this video here 12 days ago. This is before the 90-day pause that the USA administration announced, because in this video quite a lot of questions were raised. My intention is always to give an honest and balanced view of what I see in the charts. I'm really not interested in giving bullish analysis when the market is clearly in a downturn, or giving bearish analysis when the market is clearly in the upturn. So for me, it's always about giving a balance, looking at the upside and the downside, and giving you the probabilities of where those probabilities are saying the higher chances for the market to go. So I'm going to play you from exactly this video here so that you know exactly that it's actually from this video, and you can go back and watch this in the full if you want to. So this is the video. So this is the video from the 31st of March, as you can see quite clearly here. And you can see that I'm covering the SPX on the daily time frame. And at the time when I was doing the video, this was the price at 5,580. The bear market here at the end of 2022, and if we draw a line from here to where we are currently, and on the whole it's been following this particular support line, although we fell out of it there, but we are coming to this support at this moment. So what we really need to do is to actually hold this support. But judging by what I'm seeing here on the monthly, the weekly and the daily time frames, the candlestick patterns, the price action here gives me cause for concern that we're going to break down from here to lower levels. So as you can see, at that point at 5580, the way the charts were developing, I said quite clearly this is giving me cause for concern that we're going to break to the downside. So let's have a look at how that played out after I made that video on the 31st of March. This is the SPX daily time frame. This is where we were at on this support line there. And as I said quite clearly at the time, it gives me cause for concern that this is going to go to the downside. And here we are now, having gone as low as 4,800. Then going back to this video again, I gave you an analysis of the monthly time frame of the SPX to give you a wider perspective of why I thought that the market here was going to go to the lower levels. So please listen to this carefully regarding the candlestick pattern development. And I know many analysts don't use candlestick patterns, but they are incredibly useful in determining the trend. Start off on the monthly time frame with the SPX, and what we can see quite clearly here is that we see an evening star pattern. And the evening star pattern at the top of a trend is where you get a green candle at the top, and then that's followed by an indecision candle, which tells you that the momentum to the upside has come to the end. And then that's followed by a strong red Marubozu candle, which is usually an outside bar, bearish engulfing candle. And this is exactly what we're getting currently. We've still got tomorrow to go, but at the moment, it looks like quite a strong call that an evening star pattern, which is going to come to the conclusion with the end of this candle tomorrow. And what that really means is that this is a continuation pattern to the downside for at least one more month, if not longer. So you can see this is 31st of March. The next day was obviously the first of the month of April, and we're waiting for this to close on the monthly time frame. That with this particular candle is for lower prices. So that support line that I just drew, if we draw it here, this support line looks to me in danger of falling out. But not only that, if you look on the RSI here, a lot of people miss the fact that what we did here was we went to a higher high, but we actually made a lower high on the RSI. So what we've got is a bearish divergence, which seems to be playing out, which gives it more pressure to the downside. And so coming back to today, if we change this to the monthly time frame, let's see how that played out. That was the close of the candle on the March, when I said quite clearly that the whole of this, that this evening star pattern is giving a bearish signal to go to the downside. This is exactly what's happening now. This is the April candle, and we've been down to these levels here at 4,800. So once again, these patterns were giving you a lot of inside clue. I know a lot of people don't want to listen to bearish patterns. When everybody wants this to go up, just like with Bitcoin, if you're wanting an honest analysis, this is what I'm trying to give you here. That the way these are developing, the higher probability for this pattern was to the downside. And this is exactly how it's actually played out so far in this month. So going back to the 31st March video, I then looked at the weekly time frame for SPX, and this is exactly what I said at the time. What you see is quite clear upturns, higher highs along the way. But recently, what we got was a rounded top, i.e. a double top here, which once again gives us the impression that the momentum to the upside seems to have come to an end at this stage of the bull market. So now with hindsight, with the way this is now playing out, as I've shown you on the monthly time frame, but also now on the weekly time frame, if we look closer here, if we zoom in, we did come to an end of this momentum here with this hammer candle. So this gave us a little bit of hope that we may well have a run up. But what we got last week with this closing candle was another outside bar, bearish engulfing candle, which will push the pressure back to the downside one more time. This is really not looking good at all here. Of course, we can always go like this. Everything is possible. Everything is on the table. And always remember, if you've been watching my programs, that everything is to do with probabilities. There are no certainties. There are no guarantees. We're always going to be playing with the probabilities. And the probability here with this type of setup is that there is a further pressure to the downside. So in the last few videos, I've been relaying some of that sentiment where the markets are not really behaving as you would expect in the final phase of a bull market. So coming back to today, let's have a look at the weekly chart, how that played out. This is where we were on that video on the 31st of March. I talked about this candle and then this outside bearish engulfing candle. And you could see quite clearly on that video, I said that the pressure is to the downside. And you can see quite clearly we have gone back to the downside. And as I mentioned in that video, everything is to do with probabilities. Of course, this could have gone that way, but the probability was based on how this pattern was developing, the candlestick patterns, the price action, everything was conspiring from the probabilities angle to the downside rather than the upside. It doesn't mean I'm right. I will never ever take credit for anything that I say. I don't look at charts from that angle. I look at charts from the angle of only probabilities, possibilities, never certainties or guarantees. And going back to this video again, with this time I was giving you the explanation, the background of why I thought this was more likely to go to the downside. I was looking at here, the bearish divergence with the price action. Let me play you the clip. And if we go down here and have a look at the RSI, obviously we had a bearish divergence here while this market was making higher highs and the RSI was making lower highs. We still seem to be playing out that divergence, and we still may have a little bit more to go down here. We haven't quite reached the bottom of 30 yet. So this may have quite a few more days, if not a lot longer, to go down, because once it gets below the 30, it can stay there for quite a while, just like it can stay at the top here for quite a while. So coming back to today, this is the bearish divergence I was alluding to there, and this is exactly how it's played out. We were at this point in that video, and I said there's some more room to go to the downside. And this is exactly how it's played out. The probabilities have played out the way they normally would do. So it's the probabilities that have played out. It really does pay to understand how these probabilities work with these price actions and the candlestick patterns that are developed on these charts. So that was the conclusion of the SPX that I looked at in this video on the 31st of March. And then a little bit later in the video, I moved on to Bitcoin. This was on the monthly time frame. And this is what I said in that video. With hindsight, how this has now developed over the last few months, what we see firstly here is that there is a bearish divergence with the RSI making a lower high and the price here making a higher high. We also have a shooting star pattern, which is usually found at the top of the trend. And if you watched last week's video, we were talking about topping out patterns where there's an outside bar bearish engulfing candle, and this is what we've got from last month, which is February. And now currently we're seeing another bearish candle, which is another shooting star, very similar to this one here. But this is more at the bottom of a trend, but it's still a rejection of higher prices here. So this is developing into quite a bearish pattern now on the monthly time frame, which gives the impression this is going to go further lower. So just remember, this is the 31st of March. This is before the fall that we had down to the 74,000. The price at the time of the video was 81,600. And I was referring to this evening star pattern. In fact, it's an extended evening star pattern with an outside bar bearish engulfing candle followed by a rejection of higher prices with this candle. So this candle was the March candle. Let's have a look at exactly how that played out. So we were on this candle here, the March candle. This is the April candle. And look how far we came down. The low of this candle is 74,400. So this candle and the pattern here was telling us quite clearly, as I was reading the candlestick patterns here, that we're going to go to lower levels, and we went down as low as 74 from 81,000. And after that analysis on the monthly time frame, I was giving you the analysis then on the weekly time frame for Bitcoin, and this is what I said at the time. On to the weekly time frame, we have a critical candle, which is this hammer candle. This is a bullish hammer candle, which we found at the bottom of this trend, and as long as we don't close below this, there is still hope that we can still go much higher. So the weekly is really clinging on to some hope here. And the question is this little rally that we got up to 88,000 enough to have negated this candle? So only time will tell, but it looks to me here that last week's candle, which looks like a tweezer top at the top here, and an outside bar, bearish engulfing candle there, if we extrapolate that information, this looks like it's going to come back much lower here. So that's the overall unbalanced view when you look at how this is set up now. And if we have a look at the RSI down here, not that it has to go down to the 30, but there is still some room to go to the downside on the weekly time frame. So we may well have a few weeks where we go further down. So how did that play out? Let's have a look. So on the weekly time frame, this is the candle I was referring to. Bullish hammer candle, and after that dead cat bounce we came all the way back down to that 74,000. So once again the whole of this pattern was playing out on the balance of probabilities back to the downside, and that's exactly how it played out. So from here I was looking at what level Bitcoin could come back down to if we did actually come back down to lower levels from the 81,000 when we did this video. Let me play the clip. If we break the 76,000, it's going to be where we consolidated at the top here when we made this big move up to the 73,800. So this is the next level that you would expect. Anywhere around the 73,000 is where you would expect quite a lot of support here, because this was an 8-month support at this point here. So what we've now got is that the previous resistance should turn into a new support here. And this is where it's going to get critical. So here we are on the weekly time frame. This is what I drew at the time, at the top of these resistance levels. And as I said in that video, quite clearly, that the next level for this to come back down to would be this strong resistance point, which flips into support. And this is exactly where it came back down to. So this is what you call classical charting principles. When you break resistance, the price has a habit of coming back and using that old resistance as support So once again, the probabilities of the charts played out as exactly as the probabilities would suggest. So the old resistance was at 73,800 and we came back just a few $100 above that at 74,400. Then in that video once more, I went back onto the monthly time frame this time with Bitcoin to show you the 8 EMA, why this is incredibly important. So this was the March candle. We were waiting for this to close above this 8 EMA blue line, because in the past this has been shown to be a very accurate predictor. At the end of a parabolic phase of the bull market run, this 8 EMA has proved to be quite accurate. And as you can see quite clearly, we do fall below this in the early phase of the 4-year cycle. But when you get to the end of the 4-year cycle, the price action can be too strong for it to fall below the blue line, except right at the end, which is giving you a signal that we may well be entering into a bear market. So let's have a look at what happened to this March candle after I did this video and what I said at the time. I want to bring your attention to, which is going to be the monthly candle, which is going to be closing tonight and will give us a lot of information as to where this Bitcoin price is heading. This is the 8 exponential moving average on the monthly time frame. And if you've been watching my videos, you'll know that historically, this has been one of the first signs of a confirmation of a bear market. This was the first cycle. Once we'd broken below the 8 EMA, that was the start of the bear market. In the second cycle, exactly the same. When we broke through the 8 EMA, that was the start of the bear market. And in the last cycle, where we had the double top, it was after the second top. Once we'd broken below the 8 EMA, that was the confirmation for the start of the bear market. So this is a major signal which may well trigger off tonight when the market closes for the monthly candle. So you can see at the current price of 81,900 is finding support right on that line. Okay, so let's have a look at the monthly time frame. This was the candle here, and look what happened. We found support right on the 8 EMA. So quite clearly, Bitcoin is still in the bull market. The current candle is also finding support where it is there. So we'll see how that closes at the end of this month. But this strong signal, which determines the end of a bull market at the final phase of the 4-year cycle, this is still saying we're still in a bull market. Then in the video, I moved on to the 60-day cycle. This is my chart here. So I ran down on the time frames for the daily, the weekly, the monthly, and then the 60-day cycle to give you a broad, overall, an honest, balanced view of exactly where Bitcoin was going and trying to put it all into context. So this is what I said about the 60-day cycle on the 31st of March. Okay, moving on to the 60-day cycle. We made our cycle, we started our cycle here on this candle and we got our normal rally that you would have expected at the beginning. However, this was the Trump pump that we got, and then it dumped all the way down to these levels to retest that level at the bottom. And since then, we still had a rally up to this trend line that I drew in the last week's video, that this is going to be a critical level and that we shouldn't really get rejected here. And if we do, then we really need to hold this 84,000, and we haven't done that. We've fallen below that now. And going into this mid-cycle of the current 60-day cycle, we would have expected a lot more of a rally and to have broken above this trend line. We were coming up to this for the second, third, fourth, and now the 5th time. So this would have been an appropriate time to break through into the mid-cycle before you get a decline of the mid-cycle. But instead we've got this decline into this, lower than the 84. And what we really need to do at this point is make some sort of a turnaround here. But as I've shown you with the wider markets, overwhelming pressure is to the downside. And I think Bitcoin will more than likely, on a higher probability, fall into the trap of what's happening in the wider markets and continue on the downside. But let's have a look what happens. Only time will tell, but this is how I'm seeing it at the moment, with a lot of bearish pressure building up in the market. Should really see normally in a bull market or a final phase of the bull market is that we made a left translated cycle here, and we would have expected in a bull market, especially in a final phase, to have a right translated cycle where we went higher than from the midpoint. So we really need to get above this point here at 88,000 for a right translated cycle here and the continuation of a bull market. In all probability, it looks unlikely for that to happen. But as we know with Bitcoin, anything can happen at any time. So we should always be open to that. So as you can see, the charts look technically damaged, and we just have to acknowledge that this is what's happening, and we have to respect the market as we find it and not how we would wish it to be. So to me, Bitcoin is becoming a major concern in the way it's behaving, out of character with what we would expect at this stage of the 60-day cycle as well as at this stage of the 4-year cycle. And if we so there you have it. So coming back to today, 60-day cycle, daily time frame. This is the 31st of March candle when I did the video. So up to this point is where we were doing the analysis. And as you can see quite clearly, my concern was that this is going to go to lower levels, and this is exactly what happened there. So that was, again, all based on the probabilities of what I was seeing in the 60-day cycle template. These templates play out incredibly accurately for those people willing to look into this. This is the reason why I look at the 60-day cycle, because all of the charts are cyclical. So they have a daily cycle, the weekly cycle, and also a yearly cycle. So regarding the bull market and the bear market, this is what I said exactly. I think some people just want to hear what they want to hear and come to wrong conclusions. So this is what I actually said regarding a bear market on the 31st of March. That was 2 weeks ago. What's going on here? People have decisions to make, and when you balance out all the pros and the cons, then everybody has to make up their own mind. And if you've been following my channel over the last few years, you'll know that up to now, my narrative has always been to follow the 4-year cycle narrative, and that we're still in a bull market. And really, these are the most difficult conditions that I've seen over the last 7 or 8 years, especially with the macro situation and the new administration making erratic decisions, causing a huge amount of uncertainty, where investors really don't know where to go, and anything can come out of the current administration in the USA. So based on the uncertainty, on a balance of probabilities, I really don't want to be calling this a bear market until it starts moving below this level here at 73,000. Or the price falling below the 8 EMA on the monthly time frame, and that would be closing tonight. So we'll know better at that point. At the moment, I would say I'm 50-50. This can really go either way. And I know that's not what people want to hear. But if you've been following my channel, I've been very much a pro Bitcoin in terms of the 4-year cycle. And so this to me was always a trajectory that was in favor of the bulls. But what's happening here has changed that balance of probabilities to a 50-50 here for me. And until it breaks this level here at 73,000, or closing the monthly candle tonight below the 8 EMA, that would really be the threshold. But I would be saying that, yes, we may well have topped out at this point. And so there you have it. So you can see quite clearly what I said in the video. Until we break through the 73,000, and of course we have our Brexit indicators, which are our wider indicators, which will tell us whether we've actually topped out. Now, because this cycle hasn't played out with a final flourish to the top of the bull market, those indicators are not going to get triggered unless we have a normal cycle. And so far, we have not had a normal cycle. We've had a possible premature end to the cycle. And that possibility is still there because we haven't broken below this level here, around the 73,000. So lots of indicators are going to be used before anybody can call this a bear market. So what I would urge people to do is to listen to the video very carefully before coming to wrong conclusions to what somebody is really saying. And I just want to play a little bit of the last week's video, i.e. the Monday's video, where I was posing the question whether Bitcoin has entered a bear market. So this was before the 90-day pause announced by the USA administration. So this is the video here on the 7th of April, that was last Monday. As we know, the announcement for the 90-day tariff pause was announced on the Wednesday. So this is 2 days before the tariff announcement. I don't want to labor the point, but this is exactly what I said in that video. And most of the video was really following on from the previous video which I've just shown you. So let's play the clip. It really all depends on how the economy fares with the effect of the tariffs. Nobody knows how the tariffs are going to play out, but they do take time to process. So as you can see quite clearly, the focus was all about the tariffs and how the economy is going to fare. So what I was alluding to there was that depending on how the economy is going to go and how the tariffs are going to play out, that will determine which direction Bitcoin goes. And this is the Wednesday candle here, this green Marubozu candle, very strong green solid candle. And this is how it played to the upside. So when the narrative changes, then you have to change. Because if you go against the narrative, you're going to get clobbered in this market. You can't be bullish on the downturn and bearish on the upturn. It doesn't make sense. I really don't understand why people, when they can quite clearly see that this is a downtrend, want to just hear a positive message that the market's just going to go higher and higher. The markets don't work like that. I've gone through the last two videos which raised quite a number of questions in the comment section. So I hope I've been able to answer some of those queries. And if you want to go and check those videos again, so you know that I haven't taken anything out of context, it's these two videos here, and hopefully that will answer some of the questions raised. Okay, so a different kind of video for today. And just going forward, just want to make an announcement that I don't really have the time to commit anymore to these videos. So I will only be able to do these videos whenever I get the time to do so. And that could be once in a week, or once in every 2 weeks, or once every month. And as many of you are aware, we do have a private member section on this channel, and that's found in the membership tab. This is where we do 2 videos per week dedicated to Bitcoin and the Bitcoin miners, looking at opportunities, ratio trades, swing trades, all that kind of thing. So apart from the 2 videos, we do a market update every single day. This was last Friday. And these updates are in the form of a summary or an update, or some people call it a newsletter. So we do these every single day, and we also do many updates during the day if there is something important going on. And if you want to join us, you'll see the join button below every one of my videos, as well as in the description box. You've got this red button here as well. So when you click on that, for the price of a coffee per week, you'll have access to the membership tab with 2 videos, a market update, and a detailed analysis of both Bitcoin and the Bitcoin miners. Okay, so we'll leave it at that. I hope you found value in the video. If you did, then please do remember to like. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.